why is the market doing so well despite slowing foreign inflows?
Well, I mean, it depends on who you're asking, right? At this point of time, of course, the past 6 months have been quite great for Indian equities, driven by a lot of foreign net purchases that we have been seeing, over $16 billion. But this month, actually, ironically, those net purchases have slowed down. In fact, if you look at the current data, of global funds are net sellers to the tune of about $500 million. But it is the domestic institutional investors who are really picking up the baton now. They have been quite a big buyers so far this month. And according to some of the brokerages we spoke to, there is a lot of cash on the sidelines with domestic mutual funds here, and they are taking opportunity of any sort of a dip in this market to build in positions. And I think that is why you're seeing the Sensex yesterday closing higher for the 10th consecutive day, which is the longest winning streak since January 2021. And if we have the 11th day today, we could be in for a multi-year longest streak in many, many years.
So what's next for the market overall? To be sure, valuations are stretched, and it does look like traders are willing to pay a premium for them still.
Yeah, absolutely. I mean, yesterday Jefferies came out with a sort of a summary note out of the Asia Forum, and their point of view is that the optimism for Indian equities and the overall Indian economy remains still quite high among global investors, although the inflows have slowed down a bit, which they feel is largely because is down to the China stimulus that we have seen, although not the big bang stimulus, but the meaningful stimulus we have been seeing in the property sector in particular. That plus a bit of stretched valuations that have been deterring somewhat of inflows from foreign investors. But overall, the outlook looks still quite rosy as far as corporate earnings are concerned. You're expecting north of 15% growth when it comes to Nifty EPS for FY24. The festive period is upon us. Generally, this is the period when you see a lot of buying, festivity-related buying, and that is generally very good news for the consumer economy. Yes, on the risk side, yes, the monsoon has been one spoil sport. We are currently running, north of 10% deficit as far as the monsoon rainfall is concerned for the season, which could have implications for the rural economy and rural consumption. So let's see. There are a lot of risks on the horizon, but at this point of time, it seems investors are quite happy to pay that extra, 1 or 2 rupees to purchase Indian equities.
Now, you look at the small caps and mid caps, they look like they're overheating. I mean, the Nifty may be up about 11% year to date, but you've got small caps up about 28%. You've got mid caps just over 20% up. So those concerns may be legitimate.
Yeah, absolutely. I think the prevailing viewpoint, at least coming out from a lot of senior institutional fund managers and market watchers, is that clearly the valuations as well as the price action that we have seen in the small and mid cap space has been quite overheated. Yes, day before yesterday, or actually on Tuesday, you saw quite a sharp sell-off wherein the small cap index fell about 4%, the mid cap index gave away almost 3%. But the past 2 sessions, you have seen a lot of those losses being recovered very quickly. That just goes to show the level of exuberance that is there in the market. According to a lot of fund managers and analysts, they feel that at this point of time, it will be very difficult for a lot of these companies to justify the sort of valuations that you are getting, because you have some of the government-owned companies, government state-backed companies, which are trading at valuations of 60 to 70 times. We have seen those sort of valuations for consumer-focused private sector companies in the past. So clearly, there is a lot of fraud that is developing in the mid and small cap space, but it is anybody's guess, how long this can continue. Today, earlier this morning, DSP Mutual Fund came out with a note suggesting that at current valuations, investors tend to not make much returns over the next 1 to 3 year horizon. So clearly, if you're looking for you're playing the next 2 to 3 years, probably now may not be the right entry point, and that is why we are seeing some of the institutional investors now waiting on the sidelines to probably find better entry points into this market.